How's it going, everyone? It's Sam. Something weird, something very odd is happening with the Bitcoin ETFs. I think there's some sketchy stuff happening behind the scenes. I want to explain what's happening. If you don't mind, hit subscribe, turn on the bell notification underneath the videos so you can see future videos just like this one as soon as I make them. There's also going to be a link underneath the video to Margex. In case you want to trade cryptocurrency on leverage, you can do that underneath the video at Margex. There's no KYC. And you don't need a VPN, so you can start trading very quickly. And there's also a link down there to CoinW as well. Both of these have sign-up bonuses. Both are great platforms to use. Of course, whenever you use any exchange, there's always added risk because you're not self-custodying. But I think leverage exchanges can be used in a good way to help amplify your returns. And we know that you need some kind of exchange to get in and out of different cryptocurrency investments. So definitely check out these underneath the video. Now, Bitcoin sitting right around 69,500. We saw something really interesting today. A couple things that are really interesting. So we had decent volume. Let's look at some of the inflows though. ARK-B with a record high $200 million inflow. Now, this seems a little bit odd to me. It seems like the post was taken down after they posted it. Obviously, it was taken down. But this seemed really odd to me because the volume was reported at 195 million, but they had an inflow supposedly of 200 million. I don't know if that was a typo or not, but this would be a record. You can see a massive record compared to other days. Let's keep going though. That's not really the thing that's so weird today. GBTC with $300 million of outflows. Okay, a little bit higher than normal, but pretty much average. IBIT with 324 million or 4,716 Bitcoin bought. Wow, pretty impressive day. Let's keep on moving down. IBIT daily inflows, you can see here, a little bit better than average. FBTC 1.5 million. BTCW 1.5 million. DeFi, the new spot Bitcoin ETF, shows 15,231 Bitcoin on their website. Seems high given their prior AUM. Still getting confirmation on that, but let's scroll down a little bit. Basically, we have everything but BITB, and we have net inflows of 254 million for the day. So about 10%, 15% better than an average day. So, you might be saying, oh, what's so weird about this? Well, the weird thing is, BlackRock had a very strong day, and Fidelity had nothing. The last few days, Fidelity had strong days, and BlackRock had very bad days. I mean, Monday, BlackRock basically had no inflows, and I think Fidelity was like 200 or 300 million in inflows. It's really odd, and let me just show you what British HODL says. So let me get this straight. Bitcoin ETF flows die off for a week from almost 1 billion a day to nothing. Negative, in fact. GBTC starts dumping 300 million a day. Price drops. Panic. Retail panics. Leverage longs close out. People sell off. Bitcoin's price dives. Everyone claims ETFs suck, no demand, and it's all over. Basically saying that this narrative of ETF demand and inflows is done. We're going to see more selling. UK announces ETFs. Hong Kong also announcing some ETFs. Coinbase lawsuit result drops. Larry Fink goes on national TV about Bitcoin being the most successful ETF in history. Suddenly, we're back to 400 million to 700 million a day of buying like magic. Are you really this stupid to believe there isn't some strategic buying to acquire Bitcoin at the very best possible price for BlackRock and the boys? If that's what you think, I'm glad you got Larry'd, and I'm glad an institution holds your Bitcoin. They appreciate it. They appreciate it for what it is. They know there's only 21 million. Do you? Some good points. There's some manipulation going on, some mind games going on, and not saying this is illegal by any means, but you can tell there's some mind games going on just by the structuring of these buys. FBTC has a couple strong days, but BlackRock has weak days, and all of a sudden BlackRock has a strong day, and Fidelity has weak days. Why do you think they're doing this? It's because if they all buy at the same time, it shoots up the price. You might be saying, oh, that sounds like a conspiracy. It sounds like it, but it's almost perfect to a T. That's what happens. We rarely see really strong days on the same day. And we've seen exactly what British Hodl says right here. Basically, we continue to see these ebbs and flows. Yeah, GBTC selling a lot. Oh, the ETFs are sell the news event. Then they stop selling. The ETFs get a lot of inflows. The price of Bitcoin spikes up. We think, oh, this is the last day before GBTC maybe flips positive. Negative 22 million is all. And then 3 days later, we're at record outflows again. And then we have really strong outflows, but then it starts to taper off. And then we have really strong outflows again, hitting another record. Now, this is at the same time that the demand for the ETFs is doing the same thing, or doing the inverse, right? We had weak demand, it seemed like, for the first few days, the other 9 ETFs. And then we had really strong demand, and then it weakened a little bit, and then the price dropped. Longs got liquidated. The price fell 20%, 15%. People are wondering if this was just a fake out, and now we're seeing strong buying happen again. Okay, you have to realize we're playing with some of the oldest companies in the world. Some of the oldest, most successful, run the most money, are the most well-connected companies in the world. BlackRock, Fidelity. They want the ETFs to do well. They want the price of Bitcoin to go up. But they also want to get a lot of Bitcoin. They want to be successful. They want to be holding a lot of Bitcoin. They want to make the people happy that really pull strings, that actually have money, right? So they are doing this strategically. They're making sure that they're not buying all at the same time. They're making sure that they seem bullish but not overly bullish, right? They're not going out and adding BlackRock, even though they said that they're going to add Bitcoin, or they want to add Bitcoin to some of their portfolios. They're not going out and buying $2.5 billion in a day buying Bitcoin. No, they're slowly doing this. They're doing things in the background. They're talking to clients in the background. They are. There was a private meeting recently that I talked to you about. I made a couple videos on it. 28% allocation is not unreasonable if you're looking at just the numbers in allocation to Bitcoin. There's only 21 million Bitcoin, and all these institutions realize it. They're all playing games. I mean, they've all, not, I shouldn't say they all have, but some of them have come out saying they're doing zero fees. Some are donating to the Bitcoin developers. They're playing all different kinds of games because they realize how much money this is going to make them. And I've talked about it before, why this is such a genius plan for these ETFs. Like, the fact is they can make a lot more money from these Bitcoin ETFs than really they can from any other ETF. And I've gone through the math behind that, breaking it down in Google Sheets. If you want more videos like that, let me know, because I can make more videos. I like breaking down the math. But there are some games being played. We're going to see more games like this in the future, where someone comes out on live TV, tries to dump the price of Bitcoin while they're shorting so that they can buy more Bitcoin at the bottom and stuff like that. There's going to be all kinds of things like this. Now, how do you win? Well, you realize that this is a once-in-a-lifetime opportunity. This is probably going to be the best performing asset of our generation. People are going to think you're a genius for getting in 2020, 2024. It won't matter, right? If you talk to someone that invests in Berkshire Hathaway in the 60s, does it matter if it was 1960 or 1964? Do you really realize a difference? No, it doesn't matter. You think, wow, they're super wealthy if they invested like a decent amount. Same thing with Apple in the 90s. You're not wondering if they got in 1999 or 1995, right? You just think, wow, they've held on to this asset for a very long time. They're probably worth a lot. It's exploded over the last 30 years. That's how compounding works, right? We see huge increases in the price of Bitcoin. The ROI is huge, right? We're talking about 50% annual returns. Even if it drops down to 20 or 30, we're still going to be very wealthy. But the key is to not get fudded out or forced out of your investments. So stay focused. Make sure that you're plugged in. Make sure you understand what's happening in the backgrounds. Thank you so much for watching. I really do appreciate it. If you do want to play with some leverage, or if you do want to use leverage trading, there's a link to Margex underneath the video. There's a link to CoinW. I realize I'm talking about not being forced out of your investments, which is some people might say is a little bit weird when you talk about leverage, but leverage is a small part of my portfolio. I think it does help, though. So if you want to check out those links, they are underneath the video. I appreciate it. I'll see you in the next one.